So once more guys, you are welcome to the advanced mentorship. I believe that everyone that is watching this video, you are either an advanced trader or an intermediate trader. So most of the things here, what I'll be saying here, you already know them. But I want to gather everything to give you a chronological way of which you can look at these things. No matter whether you are a CRT trader, support and resistance, SMC, ICT. There's one important aspect you need to understand when it comes to forex trading, which is the concept of what? Liquidity. If you don't understand what liquidity is, it will be difficult for you to understand where to have your what? Your TPs, or where to understand where to have your SLs. Because most of the time, there are a lot of traders that will have trade come tap them out of their position before moving them into their direction. You actually say, you are buying at this level, and then you have your stop loss at this level. You actually see the market come, clears your stop loss out, and then move straight into profit. This is actually because you are still lacking behind when it comes to the concept of liquidity. So in this our mentorship, I will be focusing on teaching you how to understand how to read price action. Understand key levels, and then understand what we call time and price. So these are the most important things you'll be learning within this April mentorship, right? So before we continue, let me proceed. This video I was just do a breakdown of what we're going to do, but I will start with taking you from the beginning or from the basics of what you actually need to know when it comes to the forex market and how to actually use the right manner of approach to understand price action, which will be talking about what? Structure mapping. Structure mapping. So when we come about structure mapping, when we're talking about structure mapping, we are talking about the way the market move, right? The way the market move. We either have what called the uptrend, right? We have the uptrend, we have the downtrend, and then we have the ranging market, what you can call consolidation, or when you have the market is accumulating. This is the phases of which the forex market moves with. And as a trader, you are either in one of these phases in any particular moment in time. But also, there are also phases you need to stay away from. And that phase is what we call now the ranging market. When you see the market is ranging, you need to actually stay away from this situation. Whenever you see a market ranging, you need to stay away from this situation because you are either in the wrong side most of the time. So it's always important and it's always good for you as a forex trader to actually know when to trade these markets. Are we together? So now, let's talk about the uptrend, and I'll show you how you can use this concept of uptrend or trending market to catch good entries, given the fact you understand our master concept, which is liquidity. For instance, we have the uptrend. Uptrend. Example. For our uptrend, it's very simple. We all know we have something like this. But this is not how the forex market moves. The forex market moves in something like this. So this is how the forex market sometimes moves. You see scenarios of the market moving like this. But it is due to the concept of liquidity that you will be able to identify this trend and come up with good entry position. But let's go back with the normal one that we know, the textbook. Why do we call it an uptrend again? Because it's giving us breaking structure to the upside. What is break of structure? Break of structure is when we have a structure being broken down and we have the market moving to a continuation. So break of structure is just there to prove to you that there is a continuation in the market until otherwise. Otherwise means when the structure has been validated, we have change in character or market structure shift. So when we talk about a structure, I want to understand this. You might see this, right? This is a structure, right? But now I want you to understand this. When you see this, this is a structure. We have no breakage or anything at the moment. This is a structure. So we have what? We have our low and we have our high. We have our low and we also have our high. We have our low and we have our high. In other words, you need to understand this in the form of candlesticks. You have a candle like this, you have the wick, you have the high, and you have the low. We'll go deep into candlestick profiling with time. So for now, let's focus on what we have at the moment, or what I'm trying to explain to you at the moment. We have a low and we have a high. And also we have 50% of this level. This is what I'll also be explaining when it comes to time. Right? We have 50% of this level. Now, all of these are structures, and all of this, this is a structure, and this low and this high is what we call key levels. So a key level, in summary, is an area in the market where we expect price to have some reaction to. Either a reaction to respect or a reaction to validate. Are we together? So this is a structure. So when you see this, this is a structure. This is what is representing here, right? This is what is representing here, and then you will understand that we have a break of structure here now, right? So this is a structure. We have a break of structure. So what you really need to understand when it comes to structure mapping is identify the right structures, right? You might be identifying the wrong structure, especially when you see the market moving in this manner. It will be difficult for you to identify the wrong structure. You will be like, this is a change in character. This is a break of structure. This is a change in character. This is a break of structure. You will be confused. So you have to be able to identify the right structures, right? You have to be able to identify the right structure. You have to be able to identify the right structure when it comes to this chart, right? So identifying the right structure will give you a good level of entry. Good. So now this is a case. It can either be an uptrend or a downtrend. So when you see this, you need to identify it into a real trend. You need to identify it into a real trend when it comes to structure mapping, right? You need to identify this into a real trend when it comes to structure mapping. Now, let me give you a live example now. Now, what do we have here? We have a structure here, low, high. What do we have? Break of structure. Remember what I said. 50% of that structure is also a key level. Now, in this case, this is where we're talking about PD arrays, which simply means price and discount areas, right? So, above 50% we have the premium. Below we have discount, right? So, you know when premium, it means prices are expensive. When we're in discount, it means prices are cheap. And now we need to understand the trend of the market. What is the trend of a market? It is in an uptrend. So what are we looking for? We're looking for buying opportunities. So we're looking to buy this market when they get to a discount area, right? So in our subsequent classes, when I'm talking about PDRs, I will tell you how to identify PDRs and what are the types of PDRs. So that's why sometimes you see the market sometimes just come half to this 50% and reverse, and most of the time you see it come down before reversing, maybe around below 50%, right? Maybe below 50%. Okay? So this is why you need to understand about structure. The reason why I am telling you to stay away from ranging market is because most of the time we have equal lows, and equal highs. The market is neither buying higher or selling lower. So sometimes as a trader, you will find yourself trapped into these areas whereby the market will buy and sometimes the market will be in losses. At one point in time, you are in profit, and one point in time, you are in losses. So you are confused. And all of a sudden, you see the market manipulate, taps you out before going into your direction. The real secret, how you can understand this as a trader, is to go to a higher time frame and understand the bigger trend of the market. Because to an extent, this is a ranging market. This is a ranging market. We have equal highs and equal lows. So you discover that most of the traders, they were trapped inside here, struggling to sell, struggling to buy. The market come, tap them out, and then move into their direction. So this is what it's all about when it concerns structural mapping. So just the same for a downtrend, just the same for an uptrend, we have the same thing for a downtrend. We have what here? We have the high and we have the low. We have 50%. Price came into the premium level. At premium, it is good, it's expensive. So it is you, when you are selling, you are making good profit. So price came into the premium area, and then so we have break of structure. So in a downtrend, supply is in control, while in an uptrend, demand is in control. When you are in a downtrend, you are looking for selling opportunities. When you are in an uptrend, you are looking for buying opportunities. So this is from now henceforth. When you are looking at a trend, make sure you try to understand the higher time frame will tell you where price is going to, right? The higher time frame will tell you where price is actually going to. And then with that higher time frame, when you see the structure stop like this, and you see the market start doing like this, identify the strong low and the strong high. That will be your range. We can call it what? Your range high, and then call it what? Your range low, right? On that range low, identify where price is. Mark 50%. That's the concept I developed, which is called plot and wait, right? Plot and wait. You will discover that you have good entries because you want to wait and see what price will do at where, which level, your key levels. This is a key level, which is what? 50%, right? 50% is a key level. You want to wait and see what price will do at that key level. I have topics that I'll be sharing with you guys, and in this topic I'll show you how to interpret all of this. So this is like a summary of what you really need to understand. Understanding this level and how to plot liquidity zones. Are we together? So it's very important for me to bring back you into structural mapping, understanding uptrends and downtrend, and then ranging market. Because at the end of the day, you are either buying or you are selling. But when the market is consolidating, when the market is a stagnant position, you need to stay away from those positions as a forex trader. Are we together? So this is the whole concept you need to know. So I'll be giving you topics on our next class. I'll be giving you topics. I'll be breaking down each topic. We'll talk about key levels. So the topics we'll be talking about in our next class will be key levels. What are key levels and how to identify them? Right? Key levels and how to identify them. Talking about PD arrays, price and discount areas and how to identify them. And we talk about time and price. We talk about trade psychology. And then the last one we'll talk about risk management. So this is everything you need to understand within this April mentorship. And trust me, when you understand all of this, your trading style will be different. You will not be that type of a trader that wants to jump into the market every day to look for entries. You just wait for the right position. Because, like I said again, you might be looking to buy this market, right? We have a break of structure already here. This is 50% of this range high. And this is 50% of the range high. This is range high, and this is the range low. The market might be playing here. You have no business in this market up here. All you want to see is how it will react from here. If it violates from here, then the next level is here, right? So you always hear me again. This is the last one I'm explaining for today. I know I've stopped this already, but you always hear me say price is either moving to a fair value gap, or to another block, or to a high or low. All of this will be explained, and all of these are what? PD arrays. So that's that for today, and I want you to watch this video, and when you come to the group, ask me questions regarding these videos. In our next class, we'll be talking about the topics I just mentioned here. We'll be talking about the topics I just mentioned here of how you should be ready for. And in our next class, we'll talk about how you can use this information to make good financial decisions when it comes to the forex market. Please, I want you guys to be very, very, very interactive with the class. Ask questions, and always make sure you watch these videos more than twice. Make sure you're in a quiet environment, and also make sure you are taking notes so that by the time I'm explaining, you are understanding this concept. Also, do yourself a favor, look at these topics and go and do research about them. So I'll see you on the next class.